I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we're seeing mixed markets around the world this morning, but mostly to the downside. Our futures down about 8 handles at last check after closing on highs yesterday, making for what seems like a pretty confusing trading environment.
You think? I went home last night. I was feeling happy. Stocks went out on the highs. A lot of stocks look good. Then I wake up in the morning. I'm like, ooh, what are we doing down 12, 13 handles? And that pretty much goes with the theme of this random, day in, day out trading. I think over the weekend, people thought, okay, the market's a little iffy, but I don't want to be short just in case they do a last minute deal. Okay, and they didn't. So we opened down Monday morning, which was a buying opportunity. And then Monday, everyone thought, oh, okay, you know what? They're going to probably do a deal, or not do a deal. So no one wanted to be long, and then we opened up yesterday, and then after yesterday's action, which seemed pretty bullish, a lot of divergences, but overall, lots of things to like. You come in today, and we were down, we were down 13 handles, so now we're down about 8. So, at this point, I think there could be some ways out of the strong stocks, and I think the trend can continue. You just have to be a bit more careful, and that's why in time frames like this, we talk a little bit about low gross, low net until there's clarity, because these headline-driven markets could definitely spin you around a little bit.
So in the meantime, why don't you give us a visual then and show us the levels that we should watch in the S&P?
Well, the chart always brings me back. So when I'm turning around and spinning like a little top, I just stop at the chart and then it settles you down. And that's what you want to do, is you want to be settled down when all you see on TV is all these random headlines and all these random senators or whatnot talking about how disaster and this and that. But if you look at this trend line that I'm going over right now, this is the picture that I'd rather you watch, which is a strong trend. Okay, yes, during the trend, you have a few breakout failures. You had one on May 22nd, which gave us about a 5% correction. Then you had another breakout failure here. Okay, a very small one, but that led to this, head and shoulders top that we talked about that gave us another 4% decline. And then what did? We held the trend line. You had this descending channel. Then we broke back to the upside. And if you remember that Fed day when they did nothing and we pushed through the prior high, came back below it, that gave you a signal to take some risk off. So with some risk off, we've been trying to figure out where could you reposition. So you have your pivot low from Monday at 1674. Yesterday we closed at the high. So I'd say as long as we stay above, 1682 to 1685 today, this little channel is still intact. We have a point of reference here at 1674. So overall, I think that you could still be constructive on stocks, but if this starts to give way, the 100 days all the way down at 1660. So there's still some room. But overall, lots of different, like you said, mixed signals. So right. You have to be sector and stock specific. You can't be throwing darts right now, Brittany. There's no way. You got to like a little sharpshooting.
Yeah, some of those mixed signals where we saw the Russell and Tech setting new 2013 highs.
Right, so that you would think that gives you somewhat of a green light to have some risk on, that we're not in this crazy bearish tape that everyone's doomsday thesis is coming to fruition. And if you look here at the Russell, okay, there you go. If you were in the Russell, not in the S&P, not in some other sectors, you're enjoying 2013 highs, and you've followed one of the strongest trends out there. Okay, if you were in tech, okay, and granted, it's now technology, I think, is up 200% from those lows years ago. Look at this last trend. Okay, this also at 2013 highs, holding above the 21-day when the S&P went all the way down to the 50-day, showing you that this should be the first group that you turn to for a breakout and a broke out. So with that being said, with leaders, making some 2013 highs and the Russell and technology being strong, you could have some exposure, but you don't want to have too much if it's going to keep you up at night.
Well, and we even saw some laggard high beta stocks wake up yesterday, and we could potentially see some continuation in some of those names. Names like Google, which registered more than 1% of gains, closed back above its 100-day. Looks like it's trying to come back.
Yes, I would say laggard might be a little bit of a strong term, but a stock that's just not at 2013 highs that has a good setup. And Google is trying to do that setup, and there you go. If you look here, you will see that Google has been a little wishy-washy. Last time, I really think I had one of my bigger bets was right around here 2 weeks ago, and then that failed. Then we talked about perhaps nibbling right around here, and then you had a little bit of follow-through, reclaim the moving averages. So overall, I still like it. Look at this channel here. It's still intact. It's still consolidating what has been a really big move from November going sideways. So if you're in a swing trade, I would say stay in tier 1. If you're trading it also, it looks okay, but really it's going to have to get above this 906 to get very frisky, and for that to happen, I think it's got to be closer to earnings. But overall, this trend, if you even look at the weekly trend of Google, really nice. Okay, we talked about this in 2012 as being my high beta play of the year to take out these highs, and it did so, and still looks good, just consolidating what has been a very nice trend line. So keep that intact, and if you're an investor, you know what, you're not really worrying too much. If you're a trader looking for an additional move for a $1,000 price target, you still have some hope there.
How about Apple? Was it actually able to be lifted up 2.4% yesterday? Do you expect some continuation today?
It would be nice. It had a nice clean day yesterday. You could have came in long Apple, which I came in long, and added to it when it went above the prior day's high for continuation, and I think that was 41.50. So you look here, there you go. Okay, this is a lower range, and by the way, you look where Apple was. Apple was a $700 and some stock. Broke this support here, broke a trend line here, and then corrected all the way from the highs, and now it looks like it's trying to get back into a big base. This was a nice move after earnings. Remember, we talked about how do you measure a composure change? Well, here you had the gap up sideways, nice move, and then it wasn't ready. Came in, retested, and then pulled back, held the top half of this new channel, and closed pretty strong. So I would say for Apple to be any good, it should really not give back more than half of yesterday. I think that would frustrate a lot of traders. I would say 484, and then really this 481 needs to hold for the potential of breaking this higher. If Apple really wants to start to get better, okay, and continue to be on the A+ list, I would love to see it go positive today and get above 49.14, which is yesterday's high, and get on its way towards this 496 pivot. But overall, should be on your radar. If you took it home long, see if it can go positive today. If you sold it on the close because you don't take that kind of risk, look to see if you can make some additional cash flow there.
Chinese name Sina also had a nice day yesterday. Gains of more than 4.5% and closed on highs. Will this one be on your radar today?
Yeah, because it had what we call day one. It had a big move. It's been basing, and then yesterday woke up. So, if it woke up yesterday and it's down because of the futures, there could be some opportunity. You look at the chart. Chinese names sometimes are tricky to play. Last time we really focused on it was right here. Gave you a nice move, broke out, and then ever since then has been consolidating. Yesterday, the reason why we call it a day one, because we look for an engulfing type move, and there it was. Took back the 8 and 21 day, closed a little bit above this area. So, a lot of Chinese names have been trading pretty well. Baidu leading the way. This one I think is in the cards for new highs. So, So today, what I'd like you to do is, look for a negative to positive trade if you see a nice divergence. And then if it does get above yesterday's high of, 85.01, the next little spot here right there is 87.86.
So would you then consider Zillow having a day one yesterday? This one had a nice red dog reversal yesterday, closed on highs, and logged in about 3% gain.
Yes, this one a little different type of setup where it just had a corrective process and didn't really build an upper level base, so you were looking for that red dog reversal for an entry. And I know I came in long yesterday, Zillow, and I lost money there because I didn't give it enough time. But someone like Sperling who had it on his VTF, congrats to him. He stuck through a lot of this noise, so to speak. So with that said, today if it's lower, see if it can go positive and you see continuation. Look at this chart here. Okay, stock's been on the move, moving very well. Ever since becoming public. Lots of different areas to buy. One when it broke out right here, another one there, and since then, little faulty action here. Remember this breakout failure? That was one sign to lighten up, and then when it engulfed this upper range, if you were playing for a breakout, that's when I know it came off my radar. So if you sold there, you had the luxury of looking for some type of reversal. And here it was, where it traded below 83.62, held support from August and closed higher. So with that being said, if it's down a little bit with the futures, maybe you try and nibble. It is a very thin stock. And then if it were to go positive and trade above 87.82, you have some additional gains. But look at all these moving averages. For someone to get super excited about this stock, it's got to take out these moving averages and close above, because there's a lot of resistance right here. So just be a little bit careful with this one.
Well, if we're talking Zillow, we might as well then talk Trulia, which also had a nice day yesterday, 2.5% gain. At what level might you nibble here?
Yesterday was the day one, and now with the futures down, it could be an opportunity for day two. I talk about a lot of times my thesis. It's not really a thesis, but it's a strategy. On day one, when a stock wakes up, I tend to get involved with either a feeler or a tier one. Day two is when it gets confirmation of that day one. That's when I add, and then I like to sell on day 3 or 4. And then usually I'm complaining and crying about it if there's day 6 or day 7, but whatever, that keeps me safe. Anyway, back to the chart of Trula, TRLA. You look here, this was the gap that happened way back in August. It's been holding it, made new highs, pulled back to retest this area. Yesterday woke up, okay, took back both moving averages. So if it were to get above 48.31, this trade could potentially continue. In order for it to look a lot better, I would say it has to close above 50, because that would take away the power or potency of this 2-day down move by negating at least half. So right now it's on the radar, and it should be on yours, especially if you trade this stock.
All right, coming up, we're going to go in the trenches with some more decent setups that are a bit longer term. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with some more decent setups that are a bit longer term. eBay is one of them. It's actually been trading above all key moving averages, showing some relative strength over the past few weeks.
Yes, this one doesn't really trade well, but a lot of people are saying, do you have something I could put on as a swing? And I think that this one, whether it's the next month or into 2014, this channel, so to speak, could give you higher prices. So you look at eBay, you look at the size of this channel, it's been in it all year from lows to highs. So if you're looking for a swing trade, I would say this one is good verse 54, has to hold the upper end of it to show some pent-up demand. And then if it were to get above this 56.90, you actually could get a breakout trade on top of it. So, it doesn't trade well, but if you want to put something in the drawer, I think eBay looks pretty good.
U.S. Steel just had a nice 2-day rally that was able to help it reclaim the 8 and 21-day moving averages. Why would you say this one's a little bit better longer term?
Just because it's very slow and you don't get such great trades here and there, and it's more of a laggard comeback trade with China, so to speak. So you look here, it had a lower level area, broke above it, came back, held in there. So if you wanted a little exposure to this, I'd say you do so versus this low here. This low here is 20 bucks. And if it were to trade above this flag, above, 2130, you could see some continuation. But again, it's usually not fast and furious. Look how many days it took for this to take place. So this, I would say, take a little less, give it more time, but it's acting somewhat well.
Now, is this case the same for Schlumberger, which has been holding higher after the recent breakout at 84? Is this one also just a little bit of a slower mover?
It's just they're not fluid day trades. They're good swing trades, and if you look at Schlumberger, you'll see that for those who stood with this stock, as long as it stayed above the 8 and 21 day, you're doing just fine. This was your last upper level base after gapping up and holding it, which we talked about from our swing trade class. Here's when it broke above the prior high, and now it's trying to do it again. So if you want to stay with it, stay with it. And if you think you can get some kind of momentum trade, above 89.72, this thing will finally be back into the 90s.
O'Reilly Automotive as well, ORLY, has been building a nice upper level base. At what level would you be interested here?
I probably won't be interested, but there are people, and I look at the chart, and I probably should have been interested.
Right.
You look at the chart here, and there you go. It also, really nice trends. First trend being all the way down here, not even tested. Here's your accelerated trend, and this stock looks like it's ready to break out again. So, these type of stocks, I don't know how they break out and what type of continuity it has, but ultimately, you know, if you're in something and you want some things slow and some diversification, this stock has been moving up some nice stair steps, and stay with it as long as it continues.
And Western Digital managing to hold higher despite the news of its CFO stepping down?
Yeah, this one I don't love, but it's got a descending channel here, and if it breaks above, you know, it could see some higher prices. You look at this chart, you know, you know, I never, you know, actually it's not always the end of the world if a CFO leaves, but it always raises a little bit of, you know, a little bit of awareness. So with that being said, really needs to get above this 66-ish to get better. I think Seagate has been much better. Let's take a quick look at Seagate. Seagate, you know, on its way back up. So the sector's okay, but again, these are all stocks that don't trade that clean that you have to have a thesis with.
All right, let's do some quick hits here. Let's talk Amazon, which has been a leader in high beta tech. It did close on highs yesterday after making new 2013 highs.
Yep, imagine all those valuation and PE guys that say don't touch it. You know, technicals have been great long term and even shorter term. Yesterday did a video with Deb from the street and talked about the 70,000 jobs that they're putting, you know, in place, even though they're, you know, they're reserve workers or whatever they are. Anyway, with that said, it closed strong yesterday. This is a candidate today. You look at the chart, you know, futures are down. It's down a little bit. Nice upper level flag. If this were to go from negative to positive, I think you get a nice cute trade above 321 for cash flow. This stock technically has been acting great.
And Starbucks looks like it could be setting up for a move to the upside. What do you see here?
Another stock, strong trend, good for swing traders, sometimes good for active traders. You look at this chart here. Let me take a closer look here. Nice upper level flag. Look at that. Question is, can it get a breakout type move? And, you know, it's in the game for it if the market wants to let it. So above 77.5, I think you buy it, and it too can continue. And maybe you get a trade like you had here when it broke above the 73 and change.
And a name we don't talk about as often, St. Jude Medical. What do you see here?
What do I see here? I see another stock that I probably should be trading, but I don't. You look at the chart here, and it's, you know, already had a nice 2-day move. It's at highs. You know, again, I don't like to buy on the third day. I like to sell it, but it's probably down a little bit with the future. So if it were to trade above 54.50, you get some continuation overall, though. If you're an investor in St. Jude, you know, sing that song because it looks pretty good.
And lastly, Lululemon looks like it could be perking up a little bit. Where do you think we could get the next round of buying here?
This one, I don't know why. There's such traders are so funny. You're comfortable in some stocks, you're not comfortable with others, but ultimately patterns are patterns. But you can't be in everything, but some things you could be familiar with, and I'm familiar with this besides wearing some of their clothing, which fits very nice. Anyway, the chart looks good. And if you look here, very, very interesting. Like if you remember, I think this was earnings where it gapped down and filled that gap quickly. That shows you that it was emotional. Then it broke above it in trap shorts, and now it's been hanging in there, and you have big resistance right here. So with that being said, for a trade, it really needs to get above 74.81 with volume, hold above it, and then you still have an unfilled gap all the way up to about 80-ish. So I'd keep this on your radar. This looks pretty juicy.
All right, so as the government shutdown continues and the confusing trading environment remains as well, what will you be focusing on today?
I would be focusing on my temperament. Try not to yell at the TV too many times as they parade the politicians back and forth. Anyway, it's unfortunate. I'm not going to get all political now, but you know, to see how we just bicker and we can't get anything done and dysfunction, it's partially probably our fault because we are the voters, and you know, people have to step up for change. But you know, I know that's hard to do. But what's a little bit easier to do is this: control your keyboard. You know, control your process, learn, know what you can handle, control your time frames, long-term, intermediate, short-term. You know, put what's in your control, you know, in a better position. So this way, you then could get a better outcome. And as far as the market, you know, if you're in some things long overnight, you know, you can measure your time frame. If all of a sudden, you know, they don't go positive and it's a trap, just limit your losses and revisit it, and there'll be another opportunity. If you know, because the futures are down too, you don't just get out of a good position. You know, give it 30 minutes. Sometimes buyers will come back, and it's more of an opportunity. Yes, would you have liked immediate gratification for a gap up with some of the stocks that you own and just sell them and get paid? Yeah, we all like that, but sometimes it opens lower. It regroups at a good support level. You could buy more. You could buy it even more above the prior day's high and then sell some, and then you make much more money, but you had to have patience and you had to have a little bit of a thick skin.
All right, that's your morning call. Happy trading. Have a great day.